We know that the shipping industry is at the heart of US-China trade wars. Over the weekend, Washington pressed ahead with port fees on Chinese-built ships, and Beijing hit back. Let's dig into what's at stake, and for this, I'm joined today by Tom Beney, StoneX Senior Vice President of Ocean Freight. Hi, Tom. Good to see you again.
Morning. Good to be here.
So, first question, Tom, could you remind us briefly why Washington is so focused on these ships?
Well, I think overall, in the political atmosphere today, China has become the largest shipbuilding nation in the world. It's currently got about 70% of the order book for new ships, and currently about 50% of the total fleet in the world is Chinese built. So that's number one is that China has become the dominant force in shipbuilding worldwide, but has predominantly stolen market share from Japan and Korea. The US does not have a what I would call a commercial shipbuilding capacity, and I believe that the US government would like to support that. And that's really what the reasons why we're in this situation.
Yes, and what has changed over the weekend?
So uh, the US government have proposed a number of weeks ago the USTR penalties on Chinese built ships or Chinese owned or operated ships with some exemptions to that. And those were going to come into force on the 14th of October as of yesterday. And what has happened is that the Chinese have quite predictably announced retaliatory penalties that will now come in on US built or US owned and controlled. And that was something that's very important because a lot of the public shipping companies in the US um, have US equity shareholders. And so the market became very confused. There was sort of chaos as to exactly what this meant for the big trading companies, the big public shipping companies, etc. So we're now trying to sort through the new rules which will apply.
And how are shipping lines likely to react? And are we already seeing moves?
So we need to split it up by different classes. So in the container market, we've already seen that reaction. The major liner companies are trying to reshuffle their fleets so that Chinese-built ships or Chinese-owned and operated ships will not be doing U.S. Inbound trades with containers being brought into the U.S. And that there it's relatively, I would say, simple for them to do that, but for the big Chinese owned companies, it's not possible. So they are already starting to put surcharges on their freight rates into the US. What we're seeing in the tanker market is a little bit more confusing. I think China imports about 10-15% of the world's oil. And so, again, with the Chinese penalties which have been announced last week, there's still some confusion around it. What has happened is that US owned and controlled fleets are struggling now to know exactly, number one, the ships on the water on the way to China will be charged a fairly sizable additional amount which comes in at around $50 a net ton, which is quite expensive on a large ship. And in the dry bulk market as well, it's even a bigger impact because China is about 50% of the dry bulk market, and so there are an enormous amount of ships that may be US controlled, which are going towards China. So there's an immediate additional bill there, but also they're trying to reschedule their fleets so that they don't have this problem in the future.
And what do the new port fees look like? Are there any exemptions, for example?
There are exemptions, and this is changing on a daily basis. So, for the US, if a vessel comes in empty, or what we call in ballast and shipping, and then loads of cargo in the US, if it's under 80,000 deadweight, then theoretically it's exempt. So what that means is that US grain exports, for instance, will not be impacted. Um, so it's still going to mainly affect the large container ships which are coming in, and it may also impact some of the larger dry bulk ships. So we have some exemptions on the US side, and we're starting to see some exemptions on the Chinese side. So the Chinese announced yesterday that a Chinese-built ship will not be penalized in China, which is a significant exemption because 50% obviously of the fleet is Chinese built and is but may be controlled by a US entity, and therefore uh, we're starting to see a realization that this may not impact the market as much as we initially thought. So on Friday, the markets in dry bulk, for instance, were up 20%, and by Monday they were down. By the end of business on Monday, they were down back towards where they were. So we had an initial quite violent reaction. The market thought that it was going to create chaos, and now we seem to be coming back towards more of a normality.
And if fully enforced, what could this all mean for US trades and the container sector?
Well, there's certainly going to be increased costs, and for certain companies who use particularly liners that are built in China. Now, having said that, I think that there will become a two-tier market in the US. So you, the container the shippers will look at finding companies and will favor companies which do not have the Chinese built ships. And in similar respect, in China, the major Chinese importers will look to favor companies which do not have US controlled ships, and therefore will sort of create this two-tier market. Chinese built ships and Chinese owned and operated ships will tend to drift towards Chinese trades, and European and US controlled ships will tend to drift towards US trades. But I think in that respect, we have to be honest. China is, is the largest importer of commodities worldwide, and therefore the bigger impact here is on the US controlled and owned vessels.
And could this escalate into a global tit for tat, do you think?
No question. So there is posturing. There's a lot of I'm not a politician, but there seems to be a lot of posturing prior to a potential Trump Xi meeting, and therefore I expect the rhetoric to sort of ramp up a little bit, and we will for sure see some very strange and quite difficult to understand new rules or new penalties coming in, and hopefully sense prevails on global trade, and we will have some kind of resolution to it once the politicians get together.
Listen, great to hear your insights once again, Tom. Thank you.
You're very welcome.
For more videos like this, please do like and subscribe.